YouTube stackers. This is ST with Silver Stacking 101, where we always believe in staying stacked and packed. Stacked with silver, gold, food, ammo, and packed with the means necessary to defend our stack. Back on June 3rd, 2017, I published a video, What is the True Value of Silver? I am attaching a link to that video in the description for this video. In that video, I unveiled my model to determine what silver should trade for. Not what it will trade for, but what it should, based on historical precedent and its underlying value driver, which is inflation, the devaluation of the US dollar. I'm not going to go through the model on this video. You can go back and watch it on the prior video. When I ran my numbers, I came up with a range silver should trade at in a rational market. The range I came up with was $15.50 to $16.35 per ounce. Since that time, 30 months has passed. We have had a somewhat rational market. We're going to go through the numbers so I can show why I believe we had a rational market. Starting with the 3rd of June 2017, which is the day the video was published, I took the closing price of silver on the 3rd of every month from that day forward through the 3rd of November 2019. That gives me 30 data points. Keep in mind, when I published the video, silver was selling at $17.50 per ounce. So when I published the video, I published that silver was overpriced. I caught enormous grief from pumpers and followers of pumpers. Now, I based my model on fundamental underlying economics and mathematics. Pumpers base their claims on hope and speculation. Let's see how I did. If we average the number of the closing price of the 3rd of every month, and if the 3rd was on a weekend, I used the next business day's closing price. We come up with an average price for silver of $16.14. Keep in mind, the range I said it should be trading at is between $15.50 and $16.35. So it was well within the range that silver should be trading at based on historical precedent and a rational market. The next thing I did with this data set was look for outliers. Was there something that skewed the data that made me look good that really distorts the picture? Our standard deviation for this data set is 1.157, which equates to 7.2% of the mean. So we had a somewhat consistent market. Our maximum deviation down from the mean was back on December 3rd, 2018, and it was a negative 10.2%. I went through in subsequent videos and explained how, once we know what the value of silver should be, when it deviates downward, it creates a buying opportunity. I also went through and showed real time how I was using silver ETFs, not options. Options have an expiration date. Markets can remain irrational longer than I can remain solvent with options because of the expiration date. I can hold an ETF all day long and I was taking advantages of the dips where the market became a little irrational for whatever purpose, whatever reason. It could have been manipulation on a very temporary scale, not long term, because it doesn't exist long term. I did other videos why that's a lie. Yes, it does happen short term, but it enabled me to make profits whenever it dipped below the range for the past 3 years. And I'm not saying it after the fact. Real time while I was doing it, I did some videos. Everybody looks like a genius after the fact. But to be able to say when you're going into it before it happens, this is what should happen, and then it happens, it's a whole different ballgame. Not bragging, but these are the numbers. And I caught a lot of grief over that video and what I said. I caught grief that silver ETFs are not real silver. I can give a rat's behind if it's real or not, as long as the next guy is going to pay me real money when I go sell it. Because I'm not going to hold it long enough to ever find out if it's real and backed up by real silver or not. I could care less. Also, I use this range to structure my physical silver purchases. I certainly don't want to overpay for an asset, but I want to buy a lot of it when it's on sale. Knowing the valuation range and where it sits relative to the valuation range allowed me to take advantage when silver got on sale and lower my total cost of my stack, which mitigates my long-term risk. Also, back on the ETF side, when I'm buying it on sale below its value, I have virtually no risk and an assured profit. That's why I was able to bet 1,000% playing the silver ETFs over the past 30 months because I have a viable model that works, that's held true. And I'm doing this video not to toot my own horn, but I caught a lot of grief. Now we have 30 months of history. I challenge anybody that gave me grief to find a valuation model for silver anywhere, from anywhere, that was more accurate than my model. It was hyper accurate. It worked every time. Now on the high side, we had an upward departure from the range back on September 3rd, 2019, which went 19.2% above the mean. Now I know the mean is about the right value it should be trading at, so the market's rational. When it went 19.2% above where it should be, the market was irrational. I knew not to buy at that time. I was virtually guaranteed to lose money unless it went on a long-term irrational run, which will suddenly reverse on us. Ask the people in the 70s, ask the people that bought in 2010, 11, and 12 when irrational exuberance took over the silver market. A lot of folks lost a lot of money because they bought well above what its economic value based on historical precedent should be. I need to rework my model because inflation has entered the system in the past 30 months. We know that. If I had adjusted it during the interim, I would have been dead on. For us, the center of my range would have been the average. It's just that 30 months have transpired. I'm not complaining. I'm in my range. That's important to understand when we go out and we make investments. Are we buying something based on speculation? Is the person telling us optimistic numbers? Do they have a vested interest in us buying? Like the pumpers do? Plus, pumpers draw a big, big audience. If you want to make people mad, lie to them. If you really want to piss them off, tell them the truth, I found out. But again, on this channel, I don't care. I'm going to tell the truth because I don't have a vested interest to get on here and lie and throw out speculation and so forth. I try to do what I do using sound economic principles, mathematics, and so forth. And I've been very happy with the results so far. And when one's in the financial industry and gets out there and says stuff like I have to say, you go out on a limb, you better do your homework, because a lot of guys don't, but they're never held accountable for not doing their homework. And that kind of bothers me, because viewers go out and they make financial decisions based on someone else's hope and speculation that they really don't know. Now, I get attacked by pumpers and followers of pumpers. I'm gonna get attacked on this video. So anybody that attacks me on this video, also point out a more accurate valuation model over the past 30 months than the one I came out with when you attack me, please. If you can't do that, don't attack me. Don't attack my methods. Let me know what you think. Do you agree or do you disagree? Please give me a thumbs up. Subscribe if you haven't. Thank you for watching. God bless you, and remember, stay stacked and packed, because we are definitely going to need it one day soon.